then you get the fuel injection of some news that's unprecedented. Then retail is now losing their fucking brains over, and price is down here now. And they're like, well, of course the interest rates made it go down. Let's sell it. And then plays around. Nothing happens. And then they're like, well, wait, there's longs. Boom! Fucking smacked.
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
Hey, how's it going, guys? Welcome back to mentfx, and in this video, a very hopefully quick one, and one to encompass the last 4 or 5 videos together in this relation to, understanding where the 3 box is heading, how it's going to head there, getting involved as a result of it, and now the overall management or psychological trick to all of it, which is letting a trade run and actually letting it run. So the way this works is, as you know, when we get our 3 box setup, so you have your market breaks down. Maybe it breaks down again, but you're clearly bearish and you understand you're bearish, and you have now in motion an actual impulse as part of the first 3 box. You're protected high as a result of the creation of this new potential movement. Price begins to play around, make intermediary structure back and forth. Doesn't really matter, right? Price plays around, makes whatever intermediary structure it needs to, right? Plays around here for a while. It has an S&D portion of the move as part of your second box within the 3 box. The overall low, because we're still using, remember, everything is coming together. We're using the rule of left to right to determine the range we're in and not forget about that range, because then you're going to start getting liquidated by trying to follow every single high and low break within this area. And at this point, usually is where a lot of people want to think that the market is now officially long. The low has been put in. It's time to go long. This happens to almost everybody across the board. And again, why I'm short overall, have been short overall. This is all EU right here that you see, and still looking to liquidate the next low. As always, the same thing on repeat, no change, and looking to take that out, right? It's because this same idea here, right, with that intermediary structure, people want to trade it. People think they got it. They think they got that low. They want to trade it. There's some reason, some dumb smart money thinks demand zones here are going to start holding. And once again, that's what gets liquidated, or at least I hope that's what's going to get liquidated. We don't know. We never know 100%. But as we love to say here at mentfx, and from the theory that we trade and teach, we'd rather be wrong at the very end of a trend rather than every single time trying to predict the end of that trend. So we have our protected high as defined by that 3 box, as well as the non-protected low, or the liquidity, right? Now everything above it acts as liquidity too. Notice how we didn't have to find the equal lows that are going to be the liquidity that price needs to aim for. We don't need to do any of that. We don't need to complicate our trading. We make it simplified. If price gets here, we want to short it. If it doesn't and begins to go short, we understand we want to short it too. Why? Because we're constantly working with multiple ranges. And now in these cases, this is where intermediary ranges could work for shorts, or you could use lower time frames and normal 3 boxes on lower time frames, which is what I did here, to get positioned in a short and take that short, right? Now, the beautiful thing about the 3 box system is that you never know when the 3 box system is complete how far it can or might want to go. Now you can extrapolate or guess, right, and play around with different zones on higher time frames, just like I showed you guys the 6-month chart, and told you guys that, or I think it was the 12-month chart, right? And told you guys we're probably going to head down into these areas here. So that's probably what I'm going to be aiming for. Even though we can do that, what we're aware about the 3 box is that when it occurs, right, the 3 box is a fundamental point in time that shows you that whatever positions had created a move are now being distributed back into, that mitigation is occurring. And now, if smart money is positioned, and if smart money got in on the move that, they were watching for here, and now you have, the footprint of the big fish that is now fully complete and now might want to move, you can get those insane, you can get some moves that, come and take you out, some moves that come and just grab that low and then, turn around. But then you also have the moves that are really supported by that smart money backing and fuck off to completely new lows beyond what you could have ever envisioned, right? That's exactly what kind of happened on EU. That's exactly what happened on UJ. If you guys remember this, my golly, this is exactly what happened here. The 3 box set up, gave you an entry, and lo and behold, you had that run that just went and never gave you another re-entry, right? So if we understand that this is what happens in the smart money space, where once you get a smart money entry, it can either come and deliver nicely, come and take you out, or create some of the biggest down moves that just keep going and going and going, or up moves that keep going, 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 just like I showed you guys in the UJ example over the last few months, as it like went beautifully. And we had a ton of members get positioned on that. You're seeing that similar thing happen here, which leads me to the main point, which is letting a trade run, which is one of the coolest ways to add to your bottom line over time without having to really do anything. So make sure you've seen the last video before this one, because I show you guys a lot of funded members and a lot of mentfx members that personally got positioned and are now just holding and letting it go, you know, and taking their time to do whatever it is that they like to do. But with this understanding of left to right, figuring out where you are, figuring out the overall target and getting involved. And then as you're involved, aware that a 3-box system means that price can do this. What you allow yourself to do is leave a portion to run, but you also define ranges and targets, right? This is something that you don't really get to do in a lot of other mentorships or ways of thinking, which is defined targets. And those targets are defined by the things right in front of you, which are supplemented by understandings that go way beyond like even candlesticks, right? There's like DOM, footprints, where the liquidity lies, the passive buyers, aggressive sellers, all this crazy shit. All you got to know is the price is a fundamental aspect to any analysis. And at the end of the day, that price or these price points and these data points like this low right here is going to be true regardless of what system you use. So if there are people positioned, which we always envision there is, especially when, you know, dumb money is constantly trying to pick lows in a bearish market, you know that stop losses or sell stoppers or people that want to get into short, get out of their position, maybe even place it lower, are going to get stopped out of positions mostly, you know, all the way through here. There's people always trying to get in at some point. That's how liquidity works in the market. It goes back and forth. And this is one of the most liquid markets ever, right? But most are going to be laying right down here under that low. And as a result, that's what price is going to want to aim for. And as it aims for that, you now have a way to define a target. So when you get involved and you get in with, you know, a good stop, whatever it might be, your risk reward becomes ginormous, which means, you know, the win rate starts to kind of come out the window. It doesn't really matter. But also when this runs, right, and goes, you make great profit on the target being met, right? So that's the idea of you being right and right. But then what happens is you can get that smart money footprint that is now just ready to go fucking ham, right? Which is exactly what happened here too. I showed you guys how we were short here, and then we looked to refine it, and then we went short here. A lot of people in the mentorship caught this. And then, you know, after that went, never gave you a re-entry, came back up, fucking right through it, just smashed it, never came back up. And guess what? Now it can just keep going, right? Without giving you that re-entry on a new 3-box. Because again, as much as you might want to believe it, prices do not tend to move like this. A lot of people want prices to move like that. That is not the case, and we all know that. But the beautiful thing about that is if we can get positioned and we can get properly positioned, we can be on the positive side long term, and we can have that deliver beautifully forever. Because when you have the system of letting it run, you can just go and go and go. And as these points get liquidated, if they're with the smart money, they can drop and drop and come hit either the higher time frame areas or just keep going without ever setting up another 3-box at all, right? Drop, no setup, drop, maybe finally comes up, you know, breaks, drops, or finally shifts, and then we're off to the masses, maybe to the top side over time, right? If we get that displacement in this huge area, which that's months out. That's actually probably a year or so out, so you shouldn't worry about that too much. But the idea is we can drop and drop and drop. And we came to this understanding very simply, just based off of this clear model for basically any entry you ever need to take. You understand where the high is, where the liquidity is, and you match that up across time frames with independent ranges, aware of why you're looking at that, and then looking to get involved using that 3-box system to then let it run. And the beautiful thing about letting it run now is that you don't know if you're positioned with the smart money that wants to take this price to completely new lows or just a normal target. But either way, you can make money in that market, right? Which is exactly what happened with UJ. I mean, this was beautiful. The exact same thing happened. You get positioned, you get your first targets filled, and then there's a takeoff. And you're able to manage this either using the Dow Theory I teach you guys publicly here with the double Dow Theory against it. I think you can find that in the mentfx theory video or in the use this strategy video. I forgot which one exactly. It also shows you to go risk management strategy there. And if you're in the private mentorship, of course, you guys know how I use my personal double MB trailing rule, where instead of trailing the stop loss with every low, because as you know, Elliot wave theory, it can easily get taken out. we allow ourselves to trail using a double MB. So, you'd be looking to close for people that are in the private mentorship and understand with a close under here. And that's a way that you can be a real trend follower and trend trader rather than someone that consistently moves their stop and gets stopped out on the first big impulses. Because of course we know no market, once again, moves like this, right? Or moves like this. Right? We're aware that markets move a little something more like this, right? And they get a little bit more interesting, but we're also aware of how we can use our 3-box understanding to get positioned. And now by understanding that you can let positions run, how you can let something really, really play out. Letting something run is one of the best and easiest ways to improve the bottom line. Because again, you're not here trying to predict every single move. Your job is just to get involved and then play out a move and milk the living shit out of it until there's nothing left to take. Just sap every last piece of juice out of it, right? So when you're in a long on this and you're taking that higher, right, your job is to milk it, right? Then in interest rates news come out here and all the traders now know it's going to be long, or I think it came out here. Good for you. Guess what? That move was, predicted way before. We spoke all about it, including the reasoning for it. If you guys remember this 4-year long weekly range using the rule of left to right, break a structure, high as part of that liquidation, right? Price comes in, plays around here for years. I think this 4 years or something, right? Yeah, 4 years in here, accumulates as we need to, creates all these intermediary breaks, confusing everybody, even institutions, all that fun stuff about where price wants to head. People start getting short, start placing stop losses above every high, maybe moving their stop losses because they're emotional, maybe getting in more, but most stop losses being placed above here, right? And maybe even above here, which is why, as you know, we had the crazy move. Now, some people are going to say, oh, it's only because of the interest rates. But as you guys know, and as I love to say, news is nothing more than a catalyst for what was needed to happen. And especially if you look at this from a 4-year long range with a 3-box setup from left to right. And as it began to accumulate, and then on the lower timeframes gave you those same smart money concept entries based on the 3-box system that I teach here on this channel, the mentfx theory, you have insane movers. And then as you partial, take your normal break-even trades, whatever it might be, and then get in, you're going to have, in some cases, the huge blow-ups that actually act as a complete increase in your bottom line on your account without you having to really do anything, because now you can sit back and watch as it continues to go. And notice again, I might have the little thing up here, so it might be hard to see, but we're on a weekly time frame right now, right? This is the weekly time frame. That thing I showed you inside here was the daily. I should probably leave this top part open so you guys can see it. I forgot that I have the mentfunding thing up there, so it gets in the way. I'm sorry about that, and I can't really move it because it's already right here. But I will figure out how to get a watermark up for you guys here. Let me see if I can do something here. Actually, that's not it. Streamer watermark. What's that? Nothing important. Watermark. I forgot which one I had. They're just none of them are showing up. Your text. Yeah, this is not it. We cannot make that work. All right, we're just gonna forget these. We don't need them for now, at least. We'll talk about them later. But the point of this video, and I want to try and keep it short, is that you need to recognize how to let trades run. As you allow yourself to take your first partials, your first targets, and you realize that you can sit back and let smart money or the composite man do the rest. That's where a separation for a lot of profitable versus non-profitable traders happen, right? Especially if you're brand new and you get a really tight entry here, right? And for the first time ever, you might be up 1 to 3 on a trade, right? For some people, that's crazy. I mean, I'd probably be even tighter, this high is 1 to 7. A lot of people think that that's way beyond anything they could ever get. So a lot of people close 100% here and then see this and go, oh, I could have done that. I'll do it in the future. It's fine. But they don't actually get to recognize how these kind of huge movers start and then can continue, which is exactly, what's happening right now for me on EU. I'm looking at this move. It's almost up 200 RR if it hits this next partial. And then we're looking for further and further if it wants to do that. And, I could hit some insane RRs on this. But that's not what this is really about. It's more so about the concept of letting a trade run, because that's how you can build up your account, right? If you're aware of the overall trade and you get involved and you allow yourself to let something run and run and run, you let the composite man, you let institutions, you let hedge funds, whoever it is that's controlling the market at any given point or moving the market in big ways, you let them do the work for you. And then, guess what? Some news might come out, some red news might come out next week somewhere around here that will catapult this market into brand new lows. And everyone's going to be sitting there fucking news. The news always taking me out. I was long in this market because it was clearly a long, and now it's short. Oh, the news. Of course it's moving short, though, because of the news. It's like, no. It's a catalyst for what's already occurring on here. And if the news wants to create that catalyst to go even further, great, because it's going to add fuel to the fire. A good example of this, actually, so I suggest a few of you do this, is jump onto my Instagram, actually. Again, this is a little plug, of course. Well, I'm plugging myself, no shit. But if you go to this one or this one, I believe. Let's go like this to the right now. Right? Small little plug. There we go. So it's a plug, but it's also going to help you a lot. This is, for the most part, how markets move. And this is true about any time frame in any market. You're going to have a normal market delivering as normal, and you're going to get 3-box systems as a result of it. You're going to start getting involved on some of them. Some are going to be break-evens, -1s, but some are going to begin to be very clean entries and very clean entries. And those entries will then lead into accumulations, because, you know, what's happening here is you're having Wyckoff accumulations. You're having smart money accumulate longs over time. Notice how the 3-box systems are acting as their own liquidity points and, you know, might form equal highs, but it's not about finding equal highs and equal lows. And then markups will begin. Upon markups beginning, you're going to have the same kind of setups, and usually kind of after the smart money is positioned with these 3-box systems that I'm teaching you right here, you know, you get the main news releases that then add fuel to the fire and can create some of these crazy moves that you're now a part of. Instead of you needing to get in, get out, get in, get out, get in, get out, get in, get out, miss, right? Because the point of your trading is to allow whatever is going on in the world, some crazy shit, whatever it is that happens, whatever the next big thing is going to be, to move the price with the trade you're already in, rather than sit there trying to predict the news every single time, predict the day every single time, predict the actual like setup, because you don't need to do that, right? Because edge and profitability doesn't come from being right about your little analysis or having some like analysis porn of having like a demand zone that's perfect. No. Profitability comes from executing on something over and over and over again, understanding that the losses are building up the bottom line, the break-evens are part of that edge, and then as the winners come, some are going to fail, some are going to break even, some are going to give you decent runs, but then sometimes the fucking fuel, the stars align, and it's a crazy move. And that's exactly how moves like these are created. Don't think I catch something like this every single day. Don't think I catch something like this every single week. Don't even think I catch something like this every single year. I'm ready to go an entire year without ever catching a play like this, because I know I can still build up my bottom line following my normal strategy. However, as I follow it, I'm also aware, with my main rule of let the trade run, that if it runs and if that begins and then the news comes out and wants to sponsor that move further and add fuel to the fire and keep catalyzing this down, and the intermediary structure begins to put in basically dumb money to get really long on something, get people starting to fuel up on their stops under here, that's where those big runs come from. And that's exactly how people caught this UJ up from multiple demand zones here. Not just this one, right? There was this one. There was some back here. There was some back here. There was some 4-hour ones in here. I remember talking about this in the webinars and in the community. Again, just to help me out, guys, if you're someone in the community that has been working through the webinars, feel free to drop a little comment below and let people know about how we talk about these moves, how these moves begin to play out, how we then add to the, how we add on, and then how when the big news drops, like the little interest rates or interest rate talk begins, how the move is long from played out now, and the smart money that is positioned is now looking to take profits into those moves and holding rest to play out as it needs to. Who knows? This can keep going, and phenomenal. That's where the money comes from. Just like EU, for people that got positioned in areas like this that we spoke about, right? If you guys remember this zone here, for people that got positioned in here, as we spoke about, from this wick right here, because I remember talking about this in the webinar, from people that got positioned on this move here on the 3-day right here, or on the 4-hour in here when I spoke about that 1 week. Again, I spoke about all of this. Those are the people that are now just milking this market, and who knows? Can be milking it even further. This is where those high RR trades come from. It's an understanding that you can't predict every move, but you can enter on a predictable and tested methodology that over time can result in normal plays and also plays that you would never have anticipated. And now you have a level that has now moved like UJ did the last few weeks, and people are going to be like, well, this was only because of news. This was only because of COVID. This was only because of the state of the country. This was only because the state of people trading. There's always going to be a reason or an excuse as to why you couldn't be in the big move, as to why you missed it, as to why these times are unprecedented and scary and chaotic. But at the end of the day, The people that are profitable are still milking the market and making money, and you're sitting there looking for excuses and reasons as to why something isn't working, rather than going to the charts, studying the things you're being taught or studying the things you're hearing, even if it's not from me, maybe from someone else. Like, feel free to learn from somewhere else. Use what I'm telling you as a psychological motivator instead, right? They're using that to grow their bottom line every single day, and then you have unprecedented little moves, unprecedented big moves, right? Unprecedented big moves. Hopefully I can hit my huge RRs, and then I can be known as the renowned scammer that hit 1,000 RR, right? And it's going to be nothing more than just me executing my system for over a year, catching nothing near something that ran even 100 RR, which was this point right here, and something that might even run 200, and then something that could even run 500 to 1,000. And I'll be sitting there talking with my community, letting them know exactly how we do it, how it's done. They'll be catching moves just like it. Again, all not financial advice, all under a simulated environment, of course. This is all perspective based, so you should test everything. But that is how people differentiate and set themselves apart from the 90% that are failing or losing, right? Because remember, if you're hearing the same thing from a lot of people and people want to tell you something doesn't work or does work, you're wasting time. Open the charts and learn to see whether something does work or doesn't, because that's the only way you're actually going to learn, right? For yourself. You need to build independence in this market. You need to build independence and mastery from your own point of view. If you are constantly after some other person's review or some competition, or you're even in the space of Forex or even trading where everyone's in a competition, like, I made more percent than him, I made more RR, yeah, show me that because I did better. You are in the wrong boat, you know? You should go and play like UFC or something, right? You should go gamble on sports gambling and stuff. You can go lose your money doing that or get your ass beat in the UFC rings, right? Or you can execute something, you can test something, you can experience something, get really good at it, and take small little improvements along the way. Like, hey, try recognizing what happens after a good 3-box system presents itself, like this one, and notice what happens when it runs and then keeps running, and understand how a bias doesn't really just change. And as it keeps going, your positions can accumulate big time without you really having to do much. And then you end up getting to a point where you're able to execute under, like I said, these levels. You know, I'm holding the EU. He asked me if I'm holding. I asked him if he's holding. He said he was, and it will close later today. So I basically told him a little bit about, you know, how he should think about being in profit, trading the news, trading the weekend, or holding over the weekend. Again, check out my last video for this. And he decided to hold it, and he's going to hold it, and we'll see how this is going to play out. We still don't know, but if it keeps going down, he's going to take a big learning element from it and realize that one little entry created an immense move. And now, if there's no other 3-box system, and if no new S&D zone holds, or if price doesn't give him another entry, guess what that means? That means price is probably going to make a move like this. Because guess what? When you don't get an entry, right? When you miss an entry, or when price runs without you, or when price keeps taking out demand zones or lows, guess what it's doing? It's making whoever is positioned, right, immense amounts of money. And then you get the fuel injection of some news that's unprecedented. Then retail is now losing their fucking brains over, and price is down here now. And they're like, well, of course the interest rates made it go down. Let's sell it. And then plays around. You know, nothing happens. And then they're like, well, wait, there's longs. Boom! Fucking smacked. And it just does it over and over and over again until finally they're so exhausted. They're hurt on every level. There's no way. That's it. It's a bearish market. I gotta be bearish. And now they're bearish for the next 16 months as price begins its markup. And this is how, you know, if you keep a small little eye out, once again, I bring this up every time because I want you guys to know, if you keep your eye out for little sentiment pages like this, where, you know, you have people just, you know, putting in trades and stuff, 85% are still long EU. You know, you think it's unprecedented, it's no way. And again, it's not a representation of the entire market, of course, but it's a good representation of how the masses think for the most part. And you ask yourself, what the fuck? How are you long on this? And we know exactly how we're going to take out most of the people that are long on this and why we're heading for certain moves, right? And that's how it works. And you can do it for yourself. It's in front of you. And all you need is a simple methodology that you can apply every single week, every single day, on repeat across all markets and market conditions. And you will begin to be, you will put yourself ahead of most people. You will put yourself ahead of the curve. And you know, the only way you do that is when you focus on yourself. Focus on your own understanding, your own knowledge, and your own experience, because there's no other way around it. Thank you guys. Enjoy it.